What's good, everyone? Max here, Wealthier by the Day, day 20. I got one investment financial topic I'm going to cover today. Before I get into it, please like, comment, subscribe. I am not a financial professional. This is for entertainment purposes only. Do not take my advice, even though that's what I'm going to do. But anyways, the one topic we're going to cover today is pretty much the piece of advice that Warren Buffett has given people, and I believe he gave this advice. He's given this advice multiple times. I don't have the specific source or citing, but it's the piece of advice he gives people that people don't listen to. And it's totally counterintuitive against everything Warren Buffett himself does, which is really funny. And that piece of advice is he recommends the average person just invest in the S&P 500. He doesn't recommend that the average person, the average retail investor, basically use his strategy of picking stocks and investing in individual businesses, because the average person doesn't know what they're doing. In fact, even people that are investing professionals, people maybe that work at hedge funds and actually pick stocks and build portfolios for hedge funds, I mean, Warren Buffett would argue that they don't know what they're doing. In fact, I forgot what year it was, but Warren Buffett, and this again anecdotal, but Warren Buffett went and bet a hedge fund manager that the S&P 500, basically that he couldn't beat the S&P 500. And in a 10-year period, the S&P 500 performed better than this reputable hedge fund. I don't know exactly which one it was, but that just goes to show you that investing in the S&P 500 for the vast majority of people is the safest and best way to invest. It's the way you're going to make the most money, get the greatest ROI, and set yourself up for retirement or financial freedom, whatever you want to say. Like that's what's going to set you up. So just play it safe, play it cool, invest in the S&P 500. You can invest in individual stocks. Like I invest in individual companies myself. I just don't get too crazy with it. I mean, most of my portfolio, I'd say greater than 90% is in the S&P 500 or other index funds, international index funds, emerging markets, that sort of thing. But majority of my portfolio is in index funds or ETFs. And there's a reason for that, because in the long run, you're probably going to make more money investing in less risky assets like that have a relatively predictable ROI than trying to invest in individual stocks, which come with a whole lot of uncompensated risk. And again, most people just don't know what they're doing when they're investing in individual stocks. So bottom line, Warren Buffett said it best himself. Take your money, put it in the S&P 500. For the vast majority of people, this is what you should be doing. That doesn't mean you can't invest in individual stocks here and there, but majority of your money should just go in the S&P 500. There's a 10% historical annualized return on the S&P 500 over the last 100 years, approximately 10%. And that's just a hell of a lot better than you're going to do by yourself picking individual stocks. Majority of people that pick individual stocks end up actually underperforming the market and even losing money over time. So that's the video today. Quick and easy. It's a short one, but just based on all the information I gave you, you should be thinking, I'm going to put my money in the S&P 500, or I'm going to put the vast majority of my money in the S&P 500. I do personally try to invest in value stocks, partially because it's fun and it keeps things interesting. It's always fun to see if you can make more money than the market, but chances are I'll probably match the market or underperform it realistically over the long run, because it's hard to beat the market. The stock market it's efficient, and people are typically not. So anyways, that is the video today. I'm rolling up to the gym, so please like, comment, subscribe. I'll catch you in the next one. Bye.